أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على النبي الأمين وعلى آله وصحبه أجمعين رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي. Dear brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh, and very good morning to all of you. So, inshallah, this is the first chapter of this subject of Islamic wealth management and financial institutions. So, where I'll be talking about Islamic financial system and the users and the providers of Islamic wealth planning and management. So I think it is very important for Islamic wealth management students to understand first the Islamic financial system, how is the system all about, and then it will be easy for them to understand what would be their position or what would be their role in the financial system. So this chapter will give an overview of Islamic financial system, and then it will talk about the users of Islamic wealth planning and management services. Who are the users? What are their characteristics, and at what stage they need to use? And then the providers, different types of providers of Islamic wealth planning, and how they provide these Islamic wealth planning and management services. So let us first look at the Islamic financial system. So before we understand the Islamic financial system, we need to understand what is the financial system. So a financial system is the collection of markets, institutions, laws, regulations, and techniques that operate to enable the transfer of money from the surplus side or savers to the deficit side or borrowers. So in our financial system, there are two sides. One is the surplus side, another one is the deficit side. So surplus side are those who have extra money after their expenditure. They have some savings, so they will transfer their money. They need to invest, or they need to keep their money in a safe place, and then they need some kind of return. So at the same time, in our society, there are some deficit people who need money, who need to borrow to fulfill their needs, or to make some infrastructure. So they will borrow. So in a financial system, so relates everything related to that transfer of money from the surplus unit to the deficit unit. So here you can see the financial intermediation. So at my left side is the surplus unit here. You can see there are households, firms, governments, even foreigners. So they have surplus amount of money after their expenditure, initial expenditure. They may have some extra amount. That money should not be idle. People will like to have some kind of investment, have return. So at my right hand side, there are at the same time there are some households, firms, or governments, or foreigners that they need fund in order for them to fulfill their operating costs, or to make some infrastructure, or to fulfill their needs to buy house or car. So there are some platform or intermediaries through this. So sometimes the fund transferring from this surplus unit to the deficit unit occurs through an intermediary, and sometimes it occurs through directly, and that is through the financial markets. So in the financial markets, the surplus unit and deficit unit, they will meet directly, and then the intermediation will happen. So that is the direct intermediation. And in some cases, the intermediation will be indirectly through financial intermediary, or we can say through financial institutions like banks or credit institutions. So here at the uh, for the surplus unit, they will put their money in banks, or they'll put their money in mutual funds, for example, and then they will invest, or bank will give a loan, for example, to the deficit unit. So with that, the intermediation process happens. So a financial system is everything related to this intermediation process. As we know, in order to have this intermediation, there needs some kind of regulation in order to make sure the surplus unit, their money is safe, they can get return. So in the financial system, there is a financial market, because this market is important to for direct intermediation, and also there is financial institutions, because institution works as intermediary between the surplus unit and the deficit unit. Uh, and then they need some financial instruments. So this borrowing and lending, or any kind of investment profit sharing, there should be instrument like bond or sukuk, or Islamic saving account or investment account. At the same time, house loans or house financing or car financing. So these are the financial instruments. And then, in order to make sure the system is safe and secure, there is a proper risk management, and the money invested, the risks are mitigated. So in order to monitor, there should be regulatory agencies as well. So all this is a part of our financial system. So once we understand the financial system, so let's talk about Islamic financial system. So what is Islamic financial system? So here we have two words. One is Islamic, another one is the finance. So the word finance suggests that Islamic finance basically deals with allocation, management, and acquisition of resources and investment, and or it is at least a hope that Islamic finance will fulfill the purpose of same like the conventional, which is to facilitate the intermediation process from the surplus unit to the deficit unit, and to transform the risk. But then comes the part of the Islamic, the adjective. It implies that there will be intermediation into the Islamic finance will serve that goal of intermediation between the transfer of a fund from the surplus to the deficit unit, but at the same time it follows the rules of Sharia. So this is the fundamental differences. So what the Islamic implies. So when we say Islamic, it means that this system is based on following the Sharia principles. So what are the major Sharia principles? Is the prohibition of interest. That makes a huge difference, means that there will be no interest or riba, that surplus unit cannot get their income from interest from the deficit unit. There shouldn't be any cheating or garar or deception in this intermediation process, or in this uh, transfer of fund. There shouldn't be any gambling, or any kind of gain based on luck. There shouldn't be any monopoly on, and also transaction of non-halal goods. At the same time, Islamic finance promotes mutual cooperation and arms giving. Like Islamic finance, in Sharia, it is compulsory to give zakah, which is a compulsory alms giving. So, and it is compulsory on everyone who fulfills the minimum requirement. And also, Islamic finance aims to have mutual cooperation. Is based on profit and loss sharing instead of just giving loan based on interest. So we can conclude that Islamic financial system is something that is based on Islamic principles and values, and which is the major important thing is the prohibition or elimination of riba in the financial system and promotes profit and loss sharing mechanism in the financial system. So it's a mechanism of risk sharing rather than transferring the risk to others. So these are the unique features or characteristics of Islamic finance that we can summarize, or we can put into some points based on the overall operation of Islamic finance. The first is money as potential capital, which means that money should be considered that it has the potentiality to gain capital if it is invested. Means that money will may give us benefit if it is invested, if it is used for trading. But money itself does not guarantee a return. Money is not a commodity that we can sell the money and we can get a return. No, rather money should be used, it should be invested to gain a return from that. And in Islamic finance, every contract in the investment or deposit or taking financing, there is a contract akad. It is based on real economy, is based on trading, buying and selling, profit sharing, mudaraba or musharaka kind of contract. While in the conventional, we mostly see it is a loan contract, is giving or taking loan with a condition of interest. But in Islamic finance, there is a variety. It's a very creative. There are a lot of types of contracts. Sale-based contracts, lease-based contracts, musharaka, partnership-based contracts, to make sure that there is a profit and loss sharing, there's a prohibition of riba, but at the same time there is a profit for the deposit, for the surplus unit or for the investors. And then financing of real economic activities. So while in the as we see in the conventional financial system, which is based on interest, the income of the surplus unit is mostly from interest, where is not the interest income is not tied to the real economy. They will get their profit, their income, whether there is any production or new production of products, or if there is any value added to the economy. However, in Islamic finance, there is real economic activities. There's buying and selling, the profit sharing. The profit comes from the real business and is based on the real activities. So it's at a real thing in the it values to the economy. And Islamic finance is based on risk sharing. There is profit always comes with the liability of taking loss. There will be a risk sharing, both if in the case of mudaraba, both the investor as well as the entrepreneur, they will share the profit. And in Islamic finance, there is always a Sharia control. There will be a Sharia there will be Sharia advisors, as well as there will be Sharia auditors to monitor and to advise the financial operation. And finally, there is corporate social responsibility, which is zakat, which is a compulsory payment on every year, which is a 2.5% of the on the business capital, as well as there is other voluntary charities like wakaf and sadaqah. And all harmful activities are avoided in Islamic finance. All kind of investments, or all kind of like production of weapons or any harmful activities are allowed. So Islamic finance goes in line with ethical finance that is familiar in the West. In the West, there's a concept of ethical investment, which is very much similar to Islamic finance, because both prohibit interest and investment of any kind of activities which is harmful to human being or the environment or even on the animals. So these are the unique characteristics of Islamic finance. So what are the functions of Islamic financial system? So similar to the conventional financial markets, Islamic financial markets also bring together the surplus fund units to the deficit fund units. So they also uh, the Islamic financial system aims to serve the similar purpose, but in a different way, with the elimination of interest and with introducing profit and loss sharing, and it's a kind of mutual cooperation between the investors and the entrepreneurs. So now, what is the function of Islamic financial system? Uh, s- uh, Generally, we can see the financial system. It provides the surplus you need to have savings. So when we have extra money, we put into bank, right? So this one it gives us the bank gives us to save our money. So the financial system gives us the service of saving and wealth creation. So when we invest in mutual funds or in any share, so there is a creation of wealth. We invest, there is a profit from that investment. It creates new wealth from the wealth that we invested. It also gives liquidity. Anytime we need cash, we need to borrow, so we can go to bank, we can use our credit card, or big corporations they use sukuk or bond to get to liquidity. Sometimes government they use securities in order to fulfill their operating costs. At the same time, a credit. If someone needs to borrow, need to get home financing or car financing, they can also get credit either through the bank, or big corporations and governments they can get through the financial markets. And this financial system also facilitates the payment systems. So every day we are transferring online, buying online, but we're paying through online banking, through credit cards. So this payment process is done through the financial system. And then the financial system also uh, uh, protect uh, um protect us against the risk of loss. So the system is always monitored. There is regulation so all these all the regulations are put into practice. The monitoring and the system is quite safe in order to protect the money, in order to give confidence to the investors, and so the risk is mitigated. And finally, the financial system is also a place to implement the monetary policy by the government or the central bank, or when the central bank wants to, for example, the central bank wants to tackle the inflation. So they will take out money from the economy. So they will take, for example, a contractionary economic monetary policy. So that will be implemented as well through the financial market, especially or sometimes through the Islamic banks. So this monetary policy is also implemented through the financial system. So here, okay, so I have showed you that the financial intermediation may happen either two ways. One is the direct, another one is indirect. So the direct financial intermediation happens through the financial markets, and the and indirect financial intermediation happens through the financial intermediaries, or we can say financial institutions like banks. So now, if we look into Islamic financial markets, so that markets can be divided into many types based on different principles. So from my left side first, if we look into based on the instrument, so some are in financial markets, some are debt-based instrument like we can say like bonds. Uh, Usually, it's a security or it's a piece of paper that is a debt. So the alternative to bond is a sukuk. So that actually part of the debt market, or we can change it to the sukuk market. And then Some markets, there is equity, or we can say profit and loss, like shares, trading of shares, that is the equity market. Based on the issuance of the financial securities, there are two types of market. One is the primary market, where the securities are sold at the first stage, which is the initial issuance of the securities, the initial issuance of sukuk or share. And then the secondary market, when the securities are traded for the second time in the secondary market among the buyers and sellers after the initial issuance. And based on the trading methods, in the secondary market, it can be divided into two. There are, if the securities are listed in an exchange, where everybody knows the price of the security, how much it is sold and bought. So that is the exchange market, and this is the most famous. Like we have Bursa, Malaysia is the newer stock exchange. So all these are the exchanges. So where other parties knows about the price of the securities. But another type of market is the over-the-counter markets, where the securities are not listed, but it is bought and sold through negotiation between the brokers, who are the representatives of the buyers and sellers, without others knowing the price of the securities. And then based on the maturity of the securities, the financial market can be divided into money market and capital market. So money market is where the short-term securities are sold, are traded, usually less than 1 year. So it's like Islamic interbank money markets, we call it, because most of the securities there are less than 1 year, which is for short term. However, capital market is a marketplace where long-term securities are traded. Okay, a security which maturity is, let's say, 5 years or more than 1 year. Mostly, like sukuk is traded under the capital market. So after you understood the financial market, let's look at the financial institution, or the which is a financial intermediary. So it facilitates the transfer of fund from the surplus unit to the deficit unit. So Islamic financial institution, it provide a link between the surplus fund unit to the deficit fund unit. So to avoid interest, the Islamic financial institutions use various contracts. In order to make sure that the surplus unit, they get a kind of profit or return from their investment. So usually the Islamic financial institutions like Islamic banks, they will receive deposits based on mudaraba, or they will take deposit based on wadiah, for example, and then they will give financing based on also murabaha, for example, or musharaka mutanakisa or ijara. So they will make sure there is no riba or interest in the system. And Islamic banks, they do not give a guarantee of the return, or guarantee of the profit to the depositors. So that makes it different. One of the example, like mudaraba. So the depositor, who is a surplus unit, they will put their money in Islamic bank based on the concept of mudaraba, means the depositor is the Rabbul Mal, who provides money, and bank as entrepreneur, so bank will invest, and then if there is any profit from that investment, the profit will be shared between the bank and the depositor. So there is no fixed profit, but the profit will be shared based on the proportion fixed earlier. So this is generally how an Islamic banks operate. Similarly, with Islamic mutual fund, they also mostly run based on the concept of mudaraba or sometimes musharaka. Musharaka is a profit and loss sharing, where it's a partnership business where all the parties they put their money together and they invest. If there is return, there will be it will be shared based on the profit and based on the aggregate ratio. And if there is a loss, the loss will be also borne by all parties based on the capital invested. So these are the types of Islamic financial institutions. So in my left side, there is some commercial banks, which is the mostly the banks that we know, Islamic banks. And in Malaysia, also there is something called development financial institutions. So these are the institutions that those are established with a purpose to serve a social purpose, like Agrobank, for example, to give financing, especially to the farmers, or Bank Rakyat, which is also has a special purpose to help the entrepreneurs, for example. And then we have credit unions that they are mostly the cooperatives or small institutions that receive credit, like or even institutions that which are allowed to take deposits. For example, some cooperatives that they collect, take deposits from their members. And then there are some contractual institutions that they do not take deposit, but people pay to them based on the contract. And the example of those are takaful, where the participants of takaful they will usually make a monthly contribution or yearly contribution, and then pension fund, where the employer and the employee are required by law to transfer some of the amount to the pension funds. And third is the investment intermediaries and finance companies. So these are the companies that mostly take they take the money, they pull the funds from the investors, and they invest. One of the example, like mutual funds, they take the fund from their subscribers, those who subscribe, or those are the investors of mutual funds, and they pool all those funds and then they make investment. Similarly, the finance companies yeah, are usually they help to issue sukuk or financial securities, and investment banks as well. They also help to invest, as well as they give other kind of services like will writing, and they mostly serve corporate clients. So after you understood the system, the financial Islam system, and what are the components of Islamic financial system, so let us now look at the users of wealth management services, who and also as well as who are the providers. So for the users of wealth management services, mostly when we talk about the users, the most important users are the high net worth individuals. And who are those high net worth individuals? It varies from jurisdiction to jurisdiction. In some places, it is around 300,000 US dollar. In the case of Malaysia, as defined by the Securities Commission of Malaysia, an individual whose total net investment portfolio, whether personally or jointly with his or her spouse, in any capital market products exceeds RM 1 million or is equivalent in foreign currencies, is defined as high net worth individual. So a person whose investment, together with his wife, or even in cases with the family members, if it is more than 1 million ringgit Malaysia, and in any asset classes in the capital market. So if someone has 500,000 investment in the share market, and then he has another 500,000 as a fixed deposit in an Islamic bank, so he is also considered high net worth individuals. And then not only the high net worth individuals are the users of wealth management services, the ordinary individuals are also are the users of wealth management services, and especially with the development of the financial planning tools, the online financial planning tools, as well as the robo advisors. So it minimizes the cost. Even the ordinary people, they also can take the wealth management services. Even the retail banks, with their collaboration with the investment banks, the commercial, they also provide these wealth management services to their ordinary customers, even though they are not high net worth individuals. And sometimes big corporations, investment funds, or the private equity management companies, they may also use these wealth management services, but mostly they do it on behalf of the individuals or on behalf of their clients. And the users of these wealth management services is not unique. Some people, they may need for some purposes. Some they need this service to buy shares and stocks. So some use the management services as a whole, or some may use as a partially. Some just need to, before investing in property market. Some they need some kind of consultation for paying tax. Some they need for banking services, and some they need when they want to have takaful or insurance, and some they need trustee services, especially in case of non-Muslim, if they want to write their will, or even in case of Muslims, if they want to make a hibah or wasiya, for example. So they also need to use these wealth management services. And these wealth management services also differs at different stages of life. When someone starts a job, a work, so he thinks about, he maybe needs about first financial management, about budgeting or credit management. After that, when he gets married, so he maybe needs to think about his family finance management, as well as his retirement, or for his when he gets a child, he needs to plan for his children education. And when he is going for retirement, so he needs to plan for his retirement saving. So at different stage of life, people need different types of services, or they may require different types of financial advisory. Now, for the Islamic perspective, the users of wealth management services, it is quite same like the conventional, but the what makes the Islamic management the services different is that all the instrument should be Sharia compliance. For example, the investment, as well as in terms of distribution and protection, like for Islamic, it should be takaful, and for the protection, and for the distribution in Islamic, it should be fara'id as well as wasiya. While in the conventional wealth management, it is will, or mostly by will or an endowment. And another unique feature is in Islamic wealth management is the wealth cleansing, which is zakat planning, or the calculation of the zakat, as well as waqaf or any voluntary sadaqah. Now we look into the providers of wealth management services who actually provide. Well, I'll talk an overview of it because the next chapter will talk detail of some of the providers of wealth management. So the primary provider, I have divided the providers of wealth management into primary and secondary. So the primary providers of wealth management are some wealth management firms. So they are the firms who are, though they are maybe sole proprietorships, like it's a one person, he has vast years of experience in wealth management, So he can his own company, and then he has some other assistants, and he gives this or he or she gives these wealth management services. Sometimes it's a group of individuals, and some corporations are very large corporations and they work in different countries as well. So, and these are the wealth management companies are the ideal wealth management companies, and they are the ideal financial planners because they do not have their own products. So they will work for the best interest of their clients, which is different from insurance agents or even the investment banks, because those insurance agents they will actually market their own products. They may not work for the best interest of their clients, but these wealth management firms, they do not have their own products, so they will work for the best interest of their clients, and then they will advise which type of product or which companies or which financial institutions product is suitable. So this is the pro in taking the service from the wealth management firms. And the remuneration or the income of these wealth management companies are from the fees, or sometimes from the commission that they may receive from some of the financial institutions, or it can be both. So in Malaysia, even though in Malaysia the wealth management services are not quite long, but it's around 20 years, and there are right now 35 financial advisors licensed under Bank Negara Malaysia. So there are good numbers right now in under the Bank Negara Malaysia. So they are mostly providing the comprehensive wealth management services, I would say. So these are the Bank Negara. So you can click on the this link, and you can look into all those the list and also their websites, and you can see the services, the details of the services and the products they offer, as well as their vision and mission, as well as their fees. And besides that, there are 46 financial planners with expanded scope listed in the Securities Commission Malaysia. So, under the Securities Commission Malaysia, which is another regulator of securities, so there are also financial planners, but these financial planners are mostly giving advisory services related to investment and maybe retirement planning. So they will take the client's background and goals, and they will analyze the information, and they will give present to him the opportunities and return from that investment mostly. However, under the Bank Negara, they are mostly giving advisory services to all components of the wealth management. So now comes to the secondary providers of wealth management services that I would say, which are the Islamic banks, investment banks. We have takaful agents and unit trust agents. So Islamic banks and Islamic investment banks, sometimes they work together. As you know, Bank Islam Malaysia Berhad, it also has Bank Islam Investment. Sometimes Maybank Islamic, it has also investment banks, as well as the CIMB. So Islamic banks, they provide services of saving accounts, investment and account, and even they have financial planners or advisors. They will help to suggest in terms of the very basic investment. At the same time, the Islamic investment banks, they mostly provide opportunity to invest in the share markets, as well as they also give other wealth management services like will writing and related to services related to faraid and others. So what happens is that sometimes the Islamic banks, they bring all those services, their own services, as well as the Islamic investment banks services into one platform. through the online banking. So let's say if you have an account in Islamic Bank, if you open your online banking, you can get the services of saving or account, current account at the same time. Even you can get this takaful as well as investment services, gold investment, share investment in share market, and even will writing, faraid and wasiya related services into one platform. But again, the problem is in this institution is that they will advise their own products. So they may not work for the best interests of their clients. And then takaful agents, as you know, takaful institutions, especially the family takaful like Great Eastern takaful, FWD takaful, Etika. So all these takaful institutions now they have a wide ranges of services and they cover not only protection, I mean takaful, rather they also have investment. They most of the products are now takaful products are linked to investments. They have investment linked takaful, or even they have solely investment products, and also they provide retirement saving, children education. So they have a wide range of products which is related to wealth management. And so the takaful agents they will give the wealth management services through analyzing the client's background, goals, their financial status, as well as so on. They will provide they will suggest the best products, best investment opportunities, and the ways which one is suitable in order to have a certain retirement income, children education planning. So takaful agents also they are working as financial advisors as well, and they are giving a lot of advisory services related to wealth management. But again, the issue is they will give their also they will offer their own products. Sometimes there are some takaful agents which represent a number of takaful funds, but they are very few in number and they are not really welcomed by the takaful operators. And then unit trust agents. So mostly unit trust agents they help their clients, families or businesses to find the most suitable investment funds, whether active or passive, through the analysis of the data showing the statistics and others, as well as also helping them for retirement planning. So investment unit trust agents mostly on the investment, but they do not have they may have investment for children's education, but they do not have other like protection or we can say will writing service and others. So they more focus on the investment. And then after this secondary wealth management provider, there are some other providers that they, at certain extent, they also give some kind of wealth advisory services like tax consultants. So they will help their clients to plan their taxes. Accountants as well, they have to plan the taxes as well as sometimes, especially the businesses, to plan their taxes and zakat. So the zakat collectors also have to calculate the zakat and also plan for the zakat payment. The trustee agents, which is sometimes the trustee agents, they represent the amanah raya in order to distribute the state. And some of the trustee agents, especially in case of like non-Muslims, they will help them to write their will, okay, and also the distribution. For in the case of Muslim, they have to write the wasiyah as well as to help and to distribute the faraid. Stockbrokers also help to plan the investment, proper investment. Lawyers as well as same like work similarly with the trustee agents. They help to to do the will writing and even also help on the tax planning. Sometimes the credit counselors they also give some kind of financial advisory services, especially in terms of managing the debt. So debt management is also part of the wealth management process. So they also give some kind of advice to their clients or those who seek for help to uh, manage their finance well, especially on budgeting too, so that they can manage their credit. So these are all on the on this topic. So I have already discussed what is the Islamic financial system, what the system is all about, how it works, and its components, the financial market, Islamic financial markets, and the financial institutions and other intermediaries. And then I have talked about the users of Islamic wealth management services as well as the providers. So for your further reading, you can refer to these two books from INSEF and ISRA. And also you can look into the Wikipedia to know the current status of financial planners in Malaysia. So with that, I thank you. And if you have any question, you can uh, ask me in the comment section. And thank you for listening. Assalamu alaikum wa rahmatullahi wa barakatuh.